Welcome to my channel. I'm the covered call guy, and this is my journey to creating a $120,000 per year passive income portfolio. I am currently at 61,000, and today we'll be talking about one of my new growing positions, ticker symbol MAGY, MAGY. I currently have about $36,000 in it, paying me $6,000 a year. The goal for this position is to grow it to at least $150,000 to pay me weekly $1,000 per week. Alright, so before I get into it, let me just do a disclaimer. All content presented in this video is for informational purposes only and should not be considered financial advice. I am not a financial advisor. I am not a tax professional. Any trading investment should involving substantial risk, you should consult a professional before making any financial decisions. Past performance is not indicative of future results. All views are my own and do not reflect the opinions of other parties. I am just a random idiot you found online, and I could be completely wrong. So with that out the way, this is my due diligence on MAGY and why I own it. So this is the cover goals due diligence analysis. All right, ticker symbol MAGY, MAGY. All right, this data is as of October 31st 2025. So if it's wrong, let me know. This is what I gathered and created my slideshow. All right, so this ticker symbol MAGY, the fund is from Roundhill Magnificent 7 cover called ETF. All right, the key metrics here is as of right now, its stock price is just above $57, hovering around there. Its annualized yield is 60%. I know they aim for 33%. It does have a high expense ratio of 0.99, and assets under management, it's about 150 million. I gotta double check on that, but I believe it's 150 million as of today. All right, so why did I choose this fund? Why did I choose this ETF? The MAGY strategy, right? It's the funds of all funds approach. MAGY does not hold the magnificent stocks directly. Instead, it is a funds of funds that buy shares of another ETF, MAGS, and that is also from Roundhill Magnificent 7 ETF. It then generates income by selling out of the money call options on MAGS, typically with very short weekly expiration. So you see here the chart. MAGY buys shares of MAGS. MAGS hold 7 Magnificent 7 stock. MAGY sells weekly call options on MAGS, collects premium, and pays weekly income. As of right now, I get just about almost coming up on 300 a week. Again, the goal is 1,000 a week, so I would need about roughly $150,000 invested. I might do 175,000. I'll see when I get there. Hopefully, I'm aiming for this goal to be completed before 2026 ends. So let's see if I get there. Welcome to the journey. All right, so the underlyings of MAGY via MAGS is 7 stocks. It's the MAGS 7. So MAGY's performance is tied to its single holdings, MAGS, and MAGS is an equal weighted ETF of the MAGS 7 stocks, rebalanced quarterly. There's the portfolio of MAGY selling calls against, right? So it's Microsoft basically trying to just have equal share in it, and it's Microsoft, Apple, Nvidia, Amazon, Alphabet, Google, Meta, and Tesla. All right, why did I buy it? Because it pays weekly. Most of my ETFs right now all pay monthly, GPIQ and GPIX, and this is my weekly payer. The fund's primary goal is generating income, which pays out weekly from premium collected, and below the recent distribution amount per share, week of October 3rd, 38, 36, 40, 36.7, 37. So it has been very consistent, and the NAV has been very consistent. All right, and this is the performance, the cover call trade-off. By selling calls, MAGY generate high income but caps its upside potential. Almost all ETFs cap its upside potential. You will never have an ETF that will run with its as the same as the underlying. All right, so it's meant to generate income. It's not meant for growth. If you wanted growth, then you would just buy the stock itself, right? You would go buy Microsoft, Apple, Google, Tesla. You would just buy it, right? So here I'm trying to have some capital appreciation, but mainly as long as the NAV doesn't erode, I'm fine with the income. I'm fine with it lagging a little behind. I'm not trying to chase the price, because I'm not trying to sell, right? With growth, if you want once you 5x, that's your goal, then you sell, and then you pay taxes on it, and then you roll into something else. So I'm trying to retire as soon as possible. Those holding growth might want to work for another 30 years. I'm trying to work for another 3 years max. I'm not trying to go for growth and have to wait 10, 20, 30 years, right? I'm trying to retire before I'm 40. I'm in my early 30s, and I'm trying to replace my income. The goal here for me is to reach $120,000 a year, and then that's pretty much, I'm going to replace my income, and I'll figure out from there. I will probably diverse into other safer dividends ETFs, but when the time comes, I'll probably reevaluate what I have. For the time being, MAGY has been great, has been excellent. I think it's one of the best weekly payers, and we'll talk about its strengths right now. High income potential, aims for high annualized payout weekly. At the moment is at 16%, but it is trying to have a 32% payout. Is MAG 7 exposure, provides managed exposure to market's most influential tech stocks. I don't think the MAG 7 is going anywhere. MAG 7 is here to stay, so we should not be worried about it. And MAG 7 is basically the economy. It rotates out, so it's not going anywhere. All right, it's unleveraged structure. Like some pairs, MAGY is not leveraged, reducing certain risk. All right, so that's the strengths. What about its weakness? It does have a very high expense ratio, right? 0.99 is very high. It's extremely high. And eats into total return. So as long as it is making its consistent payment with NAV appreciation, and the weekly payouts are consistent and doesn't dips too much, I haven't seen it. It's been very consistent so far, right? MAGs and MAG 7 stocks are in strong bull market. So yeah, so the tech right now, there's an unstoppable bull run for the tech market. So we will see what happens when it goes into a downturn for a prolonged period of time. Right now we've only seen the April tariff crash and then a small dip in it, but it's been pretty strong right now, right? So everything's been going up, shooting to the moon. And of course, the concentration risk. The entire fund is dependent on the performance of MAGs and its 7 holdings. So that is the risk. Opportunities. Yes, higher market volatility can lead to higher options premiums, potentially increasing distributions. And right now, since we're in a bull market, it's been going up and up and up. So there's no worry there, right? The worry comes when there's a correction, there's a bear market, and it's a prolonged bear market. My thesis behind that is the market always goes up. The market always recovers. Unless you do not believe the MAG 7 is going to be existing a year from now, right? Nvidia just hit $5 trillion. It's Microsoft, Google, App, all of them are going to be following. It's going to go up. So I have absolutely no worry there. If Microsoft disappears, Google disappears, Tesla disappears, Nvidia disappears, then the money doesn't matter at that point. So there's no worry there for me, right? Sideways markets may outperform its underlying assets, MAGs, in a flat or slightly rising market. So all cover call ETFs do extremely well in side markets. So now we have a bull run and side markets, right? So if in any of these two markets, we will do fine. We're fine. Threats, sharp downturns. Just as I mentioned, this ETF, right, offers minimal downside protection. The fund will fall significantly as premiums received are small relative to potential stock losses. The melt-up scenarios is worse for this strategy, leading to massive underperformance. Again, if you want growth, buy the underlying. I'm here for the income, right? So it will always lag behind the underlying, right? If you wanted to buy growth, buy the ETF mags, right? Buy the individual stocks: Google, Tesla, Apple, Microsoft, Netflix, Nvidia, Meta, right? NAV erosion risk. Payouts may exceed total return, leading to long-term decline in capital base. Right now, we haven't seen that. It's been doing very well so far. I've been monitoring it, and it is a new fund. So at the moment, there is no NAV erosion. There has been capital appreciation so far. So I will keep an eye out on that. There will be NAV erosion once there's a downturn, but I believe in the Mag 7, which is why my conviction is there. I'm going to dollar cost average. So let's compare it to its peer comparison. How does MAGY stand out? MAGY is just not another weekly pair, right? Its strategy is highly specific, right? The 7 stocks. And so we're going to compare it to WPAY and ULTY. ULTY. I'm just say ULTY. All right. So I'm just going to highlight MAGY's distinct position, right? So I gave it these nicknames. All right. So MAGY is the pure play and under leverage, right? Concentrated under leverage bet on the Mag 7 stocks. I have 100%, 110% conviction in Mag 7. Directly own mags and sell calls against it. This simple structure offers clarity and avoids hidden leverage. It targets high income by monetizing the inherent volatility of Mag 7. Ideal for investors specifically bullish on the Mag 7 who wants to convert its volatility into a high consistent income stream. Right, so it's been very consistent since inception. I have zero doubt that it's going to be going it's going to be disappearing anytime soon. The Mag 7 is there, MAGY will be there, right? Then the WPAY, which was actually going to be one of the other pick. I was debating WPAY versus MAGY, but WPAY just didn't fit my portfolio at this time. All right, so I named it the Leverage Diversifier. It's a diversified leverage basket of many different cover called ETFs. Okay, this one I believe is 1.2x. Right, it leverage against its assets to invest in broad portfolio of underlying options. I believe it does synthetic, so that's another con in my opinion. You're gonna have to do swaps, and sometimes and so it swings both way. So WPAY will swing you to the moon and beyond during a bull market. During correction and prolonged bear market is going to drag you down and blow up your portfolio also. So it fits best with people who are willing to associate that risk with leverage. I want something a little bit more reliable, stable, and consistent. WPAY will amplify losses and downturns and increase costs. So it's just for those who are willing to have that risk. Since I am currently building out and I'm in my accumulation phase for my portfolio. All right, I'm trying to reach my $120,000 a year goal first. Once I reach that, then maybe I will diverse some funds into WPAY, and it's my little, my extra, see what it does on the side. All right, so WPAY is like I want to say my backup, but it's there. And then there's ULTY, the aggressive and eroding. I believe this cover call fund is the one that gives cover call, the high yielders a bad rep. Right, it's the aggressive and eroding. Right, it aims for the absolute highest possible yield. Pay me as much as possible. I don't care about anything else. It's basically how I see this, right? Invest aggressively in concentrated portfolio, high yielding. This strategy often demonstrates significant tendency for NAV erosion over time, making its yield unsustainable. So if it keeps going this route, it will go to zero. It's just mathematically, it's going to zero, right? They can do all the reverse stock splits, whatever they want. If they keep going this route, they're eventually going to go to zero, right? Yield at all cost investors who understand and accept the very high risk. So those who actually invest in it know it's not a long-term play. They get in, maybe a month in, out, and then it dips. They'll buy it a month in, out, and then they rotate the money. This is for very, very short-term investors and those who know what they're doing. All right, my final verdict. What do I think of this, right? So after my full analysis, right, MAGY is a point and very highly specific tool. It's a pure play income vehicle for the Mag 7 without resorting to leverage. It has currently a 16% yield, so it is massive, and it's a weekly payout. Is fantastic for cash flow. It's transparent. It holds 7 stocks. It's the Mag 7. You can always find out what the Mag 7 is, right? It's unleveraged, and it's I believe it has, because it's the Mag 7, this puts its advantage over all of these peers, right? So, let's say it again. You're paying a high fee to sell all of your upside in the market's strongest stock. So this is not a buy and hold growth position, and it's not a replacement for QQ or MAGs, right? You buy MAGs for the income, not the growth, right? It's an excellent tactical tool for investors who believe in the Mag 7, which I do. And it will trade sideways to up and who prioritize immediate high cash flow above all else. Yes, so I want that weekly payment, right? So pay me out. I care about NAV erosion, but if it stays the same and it's just, I buy it at $50-$55, if it stays $50-$55 the entire 20 years that I hold it, but it's consistently paying me out, then I'm all right with it. All right, it's unleveraged, it's straightforward, and compared to other weekly payers, it has been doing very, very well. Again, it is one of those stocks that you have to monitor in the case of correction or a downturn. So in the case of a downturn, I will dollar cost average, because again, my conviction in the Mag 7, it's not going anywhere. All right, the Mag 7 is basically the economy at this point. I mean, if Microsoft blows up, then really, there's no, then something has gone wrong in the world, right? Google disappears, something has gone wrong in the world. At that point, money doesn't really matter to me, right? So that's my conviction, right? So basically a nuclear warhead has gone off, and yeah, Mag 7 disappears. But at that point, then I don't think any of us would care what's our portfolio is. So that's my final verdict on MAGY. I hope you found it educational, entertaining, and why I hold it. I currently have $36,000 in it. It pays me just about $6,000 a year. I'm trying to grow it to $150,000 position, paying me $4K a month, $1K per week, and I hope to achieve this by the end of 2026. So welcome to my channel, and hopefully you guys stick with me throughout my journey. Take care.